My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little bit of money. My job is not just to entertain, but to educate. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Sometimes you just have to hold your nose and buy. It's a tough thing. Often you get the timing wrong, meaning you'll immediately lose money as your stocks keep falling. But when the averages come down too far too fast, history says you need to be a buyer. Because when the market gets oversold, it will inevitably bounce. You know what? I think that's what happened today. The average spent most of the session down big, before rebounding hard in the afternoon as the price of oil pulled back from its highs. The Dow only finished down 204 points. S&P declined just 0.27%. NASDAQ shed 0.28%. What a comeback, based on a decline in the price of oil at the end of the day. But I think the oversold nature of the stock market had much more to do with it. The session started out really bad because we got another big rally in the price of oil. This spike, which was felt far more in Europe than the United States, happened because of a volley of attacks on oil fields. First, Israel bombing the giant South Pars gas field, Iran's biggest gas field, and then Iran hitting Qatar's biggest LNG facility, causing some serious damage. Unlike the U.S., which is overflowing with natural gas, the rest of the world doesn't have enough to go around. Qatar is the world's biggest exporter, so the price of that gas jumped globally, taking the world economy one step closer to a recession, even if it didn't impact our price. We're now headed toward our fourth down week in a row, even as most of our companies are doing quite well, and interest rates, they've been tame. The president did say on Truth Social that no more attacks will be made by Israel on, quote, this extremely important and valuable South Pars field, end quote, unless Iran attacks Qatar first, which in that case, the whole South Pars field would be wiped out, Trump claimed. Now, is that an olive branch or just some random musings that kind of don't mean anything? Honestly, it doesn't matter. Because at today's lows, we reached that hold your nose and buy moment where the market got so oversold, so negative, that it really doesn't matter what happens. That's right. Things turn around. How can I be so sure that today's afternoon rebound can continue? I can't. But all I have is history. I like history, though, because it holds up. And I got sentiment, well, at least as well as it can be measured. So let me make this tangible to you. Let's go a checklist of what I like to look at. First of all, I like to look at the American Association of Individual Investors poll. That poll right now is showing a shocking amount of bearishness. Right now, the bulls are at 30.4%. Just so few bulls. Neutral, 17.6%. And a phenomenal 52% of the people believe that the market's going to go down, maybe big. They're bearish. And that's a highly unusual skew. It means there are far more bears than bulls. That matters because when just about everyone's already bearish, there's nobody left to sell. When you see this kind of ratio, it means that bears are more likely to convert to bulls on any positive news, and they're going to put their money to work in stocks. It's just unsustainable to have this many bears right now. Now, mind you, I don't have a reason to justify that buying, right? Maybe President Trump sticks by his word, but it somehow opens the Straits of Hormuz, destroying the Iranian leverage. Maybe Iran's his uncle, though I can't imagine that. Maybe a new source of oil comes to the market with a pipeline that we know about that's bigger than we thought. Maybe we just let the hostilities cool off a little bit. Second, CNN's got this index. I don't look at it that much, except for when it's extreme. It's called the Fear and Greed Index. It's a total market sentiment tool. There are 5 elements of the semicircle: extreme fear, neutral, greed, and extreme greed. Right now, we're solidly in the extreme fear sector. Again, like the bull-bear ratio, it's unlikely that the panickers are going to be right. Historically, that would be highly unusual. They know nothing! Third, there's the trusty oscillator it's put out by this organization called Market Edge. I swear by it. It measures overbought and oversold pressure on the S&P 500. Now, I've been studying this oscillator since 1987. It comes out every day right when the market closes, and it's rarely steered me wrong. If you buy into an extremely oversold market like the one we have right now, you tend over the next 30 days to begin to make out like a bandit. The notion behind the oscillator is that there's a level of equilibrium between +3 and -3, where you're kind of in this thing called, it's no man's land. The oscillator means nothing between those guideposts, buy or sell. When it reaches -5 or +5, you begin to get some historical impact. +5 signals that the market's overbought, which quite simply means that things are too bullish. Sell, sell, sell. They're so positive that if there's any negative news, the averages could have a severe setback. Same with the -5 gauge. If we get a flash of something positive in an oversold market, the bears are going to have to scramble, which rapidly moves up prices. At last night's close, the oscillator was at -7.5, and that's extremely oversold. At these levels, the odds now favor the bulls, which is one reason why I think we rebounded in the afternoon. No, it doesn't mean that the averages definitely will fly higher, but it's very rare for the market to get this oversold. The last time we dropped more than yesterday was shortly after Liberation Day. That was last year, April, when the oscillator clocked an incredible -10.62. 30 days later, the S&P was up 13.6%. There hasn't been another -10 reading since then. They're very rare events. A study of the oscillator's history shows that an oversold reading this extreme almost always produces large gains out 30 days. The oscillator's only led me astray a handful of times in the last 38 years. Mostly there were situations where we had genuine systemic risk. Think the miserable week before the crash of '87, or the weeks on end at the onset of the financial crisis. Then it was wrong. Those are the exceptions, though. As a rule, you have to buy something when the oscillator gets this oversold. You do. And that's why we did some buying for the charitable trust today. Members of the CNBC Investing Club know we sent out a bulletin that said we were buying 2 stocks. And we've held off that kind of commitment for a long time. But today, because of that oscillator, we pulled the trigger out of respect for the oversold condition. Now, I want to be very clear. I'm not saying that oil's peaking here. Although I was surprised by the weakness in West Texas Intermediate crude today. I hope you were. I'm not saying the war with Iran's winding down. No, too many variables, including a president who orderly says the war is over and maybe he'll send in ground troops. I am saying that on any good news of any proportion, perhaps after a retest here, there could be a snapback rally of some proportion. Here's the bottom line. History says that when we get this oversold, there will be a meaningful rally, something lasting. I'm going with history. It's too stark, too accurate to do otherwise. James in California. James.
Hello, Jim. It's James calling from Indian Wells, California.
All right. What's going on, James? Good to hear from you again. It's been a while.
Yeah, love your book. Gave it to both my grandsons, Jackson and Hunter, for Christmas, and they're reading it too. So that's great.
Okay.
Thank you for that.
Okay.
My stock has been going down about 30% on this company that just had a great quarter, a great buyback. What's going on? What's the catalyst for Reddit?
Oh, but I got to tell you something. I've watched this Reddit. I mentioned it in How to Make Money in Any Market. I never thought it would get down this low. I think it's an incredibly valuable property. It charges too little for advertising. It's got a great group of people who are very active and constantly checking the site. I'm sticking by Reddit. As a matter of fact, I'd like to buy some stock right here at 27 times earnings. All right, look. When we get this oversold, history says we are in store for a meaningful rally. I think I got to go to history. I'm sticking with history. Mad Money tonight. Five Below blew the doors off this latest quarter. So is this turnaround story just getting started? I'm running through the numbers to find out. Then here's one that you got to think about. Shares of J&J barely reacted yesterday to the FDA's approval of its oral treatment for a gigantic indication, plaque psoriasis. So what gives? I'm getting to the bottom of this fantastic story. And Signet is shining bright today in otherwise ugly tape, and I'm learning more about the company's earnings results from the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.